Good morning, everyone. Thank you for joining us today. My name is Nyla Isa, and I'd like to go through a couple of housekeeping items before we get started. You can maximize or minimize the webinar pane during the presentation by using the red orange arrow buttons in the upper right corner of your screen. During the webinar, we also encourage you to ask questions. In the webinar pane, you'll see a question box that you can use to type your question and click submit. Our presenters will answer those questions as time allows during our Q&A session at the end of the presentation. Second, to ensure a good audio quality, please check your setting to ensure the appropriate audio option is selected. If you're using a telephone, please click on the phone call audio option, or if you're listening through your computer, then please click on the computer audio option. Our presenters today are Teresa Brown, Consulting Partner with Armanino. Also, Tom Brunton, CFO Advisory Senior Director at Armanino, and Grant Lamb, Audit Partner at Armanino. We also have Jason Parker, Accounting Solutions Manager, joining us from Lease. I'm going to hand it off to Teresa, who will be moderating today's session.
Thank you, Nyla. So for those of you who are joining us from outside the firm, welcome. Thank you for joining this morning after a nice long weekend. Hopefully everybody had an opportunity to enjoy some turkey. We want to talk quickly about our learning objectives today. So we're going to talk a little bit about how to effectively plan and implement the new changes so that you are compliant. We're going to talk about recognizing what's required to adopt the new standards. We're going to talk about who you need to educate and how that's going to affect your forecasting, your accounting policies, your key performance indicators, et cetera, and how to determine how and if the latest suggested changes, if passed, are going to impact everybody. So first, before we jump in, I would like to introduce the panel to you. So I'm going to go left to right. I'm going to start with Jason, then we'll move to Tom and Grant. I'd like each of you to introduce yourselves today and give a little bit of information about why you're here today and who you are as it impacts the leasing industry. And then we'll jump into some Q&A. Jason, let's go.
Thank you, Teresa. So as Nyla mentioned, Jason Parker is my name. I am speaking today on behalf of Lease. So Lease is a SaaS solution to provide compliance for the new lease accounting standards. So for today's purposes, I'm going to be here representing the technology aspect of this, right? Because as organizations are looking to adopt all of these new lease accounting standards, technology is something that most organizations are looking to utilize to assist with that. And today we'll talk about how specifically Lease or really any SaaS product can help make that compliance just a little bit easier.
Good morning, everyone. Tom Brunton here, Senior Director with Armanino. I've had the good fortune or good judgment to get myself involved with leases from an early stage. Here, helping companies adopt the new standard, what it means for them, how they best go about adopting within the consulting practice here at Armanino, adopted and helped implement for a number of public and private companies and across industries and size. Work closely with Teresa, so pleasure to be here with you today.
Hey everybody, my name is Grant Lamb and I'm an audit partner at Armanino. And I think I've been following 842 ever since it was first proposed back in 2006 or so. I remember at the time I was a young and eager auditor and I volunteered to draft an article on this new lease proposal that we were hearing about. And ever since then, I've sort of become one of our audit department subject matter expert on lease accounting. So fast forward to today and I lead our department's training on ASC 842, and I help develop a lot of the content that we put out, such as white papers and webinars and articles. And I'm also helping many of our audit clients understand and transition to the new lease standard. So I've been keeping up with this since the very start and excited to finally see it take effect.
Great, thanks Grant, thanks Tom, thanks Jason. So we've got some experts here on the phone today that we're going to be talking with. And sort of, we're going to address this in 3 different ways. There are people involved in the process of adopting 842. There are processes involved, and there is also technology. So we've got experts in all 3 areas. Hopefully we will be able to glean some insights from each and every one of these folks. So I think the first thing I want to address this morning is the people. It definitely takes a village to adopt 842. And while we are all very happy to say, hey, that's the accounting department's deal, or that's the auditor's deal, or that doesn't impact me, I know that that's not the case. So I'd really love to hear from each of you about the people that are involved. And I think I'd really like to start with Grant on this question. Grant, how many people, including the accounting department and the auditors, are involved in adopting 842?
That's a great question. I think internally it definitely starts with the accounting and the finance folks. I mean, they're the ones that's closing the books that's going to be primarily responsible for adopting 842. But I would even start thinking outside the organization. What are the key stakeholders externally that we should be thinking about? And I'll start thinking about your bankers and your creditors. Because of 842, your liabilities are going to go up. So think about how that may impact your banker's perception of your leverage, of your debt service coverage, and ability to borrow more. Think about the impact on your debt covenants. Potentially the financial metrics and ratios that are in your debt covenants could be impacted. You shouldn't face a covenant violation because of an accounting change. That's not the intent, obviously, of 842, but that can be assumed. So start discussing with your bankers now. I've had some clients that were able to obtain a waiver or covenant waiver due to an accounting standard change. Something you may want to think about now as you start adopting 842. But bankers, obviously, you want to start thinking about investors. There could be significant changes to your balance sheet and your EBITDA and other financial metrics and ratios. So think about preparing your investors for these upcoming changes. Gosh, there's tenant advisors either within and outside your company you may want to start discussing a new standard about. Think about how this may impact your corporate real estate strategy, right? Some of the benefits that existed because of leasing may not be there anymore because all the liabilities will be on your balance sheet now. So does that impact your buy versus lease strategy potentially? Let's think about the tenant advisors. Legal counsel obviously should be involved both internally and externally. Think about how certain contracts are structured. Because of the definition of a lease has changed now under the new standard, you may be able to structure your contracts in certain ways that may qualify it as not being a lease, or you don't even have to follow 842. So a lot of people inside and outside your company, other than your accounting finance teams, that you should be thinking about discussing with.
Great. Tom, any comments on that one?
Yeah, I'll piggyback off of that from Grant and just say, procurement obviously needs to be at the table early. I mean, just generally, right? Leasing, unless you're in the facilities and real estate management or equipment management seats or wearing that hat, a lot of times leasing was an afterthought for many people since it was off balance sheet. Everyone loved to kind of ignore leasing. A lot of times companies, in my experience, and I'm sure in Grant's experience too, a lot of people don't really have a good sense of how many leases they even have within an organization, right? And so this is really through the focus with it going on the financial statements has really renewed that need to have a complete kind of view and picture of your lease portfolio. I'm sure Jason has seen that, right, from his side of things as people estimate early on the lease query process, right? Everyone has to estimate how many leases they think they're going to have when they're talking to these software providers, and it may start at, oh, we only have 25 or 30 leases, and by the end of the process they could be up to twice or 3 times that when they've done the full scoping exercise. So procurement, legal, FP&A, right? Everything that Grant said is absolutely spot on. And it's just making sure that everyone gets to the table early, and so you don't get 3/4 of the way around the track, only to find that you haven't included some of the key personnel, like the business managers, right? Like if you have a product manager that does his own thing or her own thing because they're autonomous on the day-to-day operations, they may have leases that no one else in the organization has any clue about, especially if these leases are managed on a decentralized kind of at location level. So really, yeah, agree with everything Grant said. Bring as many people as you can early to the table, talk about it, and make sure it's really spreading across the org.
Hey, Jason, how many people have you seen at demos of your software? And what are the most successful ones that you've seen?
Yeah, well, so the best way to answer this question is that initially, I think, as Grant alluded to first, is this starts as a project for the accounting and finance team, right? So we often see an accounting manager, potentially a controller, depending on the size of the organization. But as we move along the process to where organizations are starting to identify other areas of the business, not only that can benefit from using a system, but actually are must-haves in terms of people that need to interact with the system, that's when that list grows, right? Grant mentions the legal team, Tom mentions procurement, but it's really, I mean, it's not an endless list, but it's essentially an endless list when we think about all of the different people that interact with a lease, period. So when we think about the lease life cycle, when a contract gets executed all the way to the end of the process where we are posting journal entries at the end of a given period, when we're putting together the financial statements at the end of the year, there are going to be people involved in nearly every single department in the organization. And another thing too, Teresa, one thing we hear very commonly, and I think we'll talk about this as we move even from people to the process conversation, but the communication barrier at a lot of organizations related to leases specifically right now, it's just not something that people have really thought about, as Tom alluded to earlier. Whether the executing party provides the document to the accounting team in the appropriate period. Previously, all you're really missing is just the label of the expense in the accounts payable department, right? But now that these balances are going to be on the balance sheet, if in just one example, we have somebody from an executing party, whether that's the legal team, procurement team, or even a real estate department, if they don't notify the accounting team in the appropriate period, hey, we have executed a leasing contract. Now that these are going to qualify as lease liabilities and right of use assets on the balance sheet, that cutoff risk that most auditors are assessing for from balance sheet accounts now exists from a leasing perspective. So to summarize, we typically try to ensure organizations realize that this is an accounting problem that we're trying to solve, but it's not just the accounting team that is necessary to solve it in the best manner. So.
Yeah, that's a good point. I think just getting a complete listing of your leases has been a big challenge for companies that have adopted 842. Under the old standard, it may not have been that significant. If you forgot a lease, the only impact may have been your lease disclosure that was buried in the back of your financial statements. But now, if you're missing leases and you're not classifying leases or contracts that should be leases, that could be a significant misstatement on your balance sheet. So now it's a much bigger issue. So to Jason's point, it's the list is kind of endless. Everyone that touches a lease will be impacted by this.
Mm-hmm. And what about, so let's switch gears. We're going to come back to people in a minute because I think this is a really important part of the conversation, but the process. So Jason, all of you have talked about identifying leases. As far as the process goes, so if I'm a real estate guy and I know that stuff just auto renews, or I mean, am I even going to talk to the accounting department? How do you inventory what you've got as far as leases go? Because a lot of times that stuff's been on the P&L for years and nobody even looks at it. How do you get to the point of identifying the leases, first of all?
Yeah, there's a couple different ways that we at least suggest companies go about it. I think the first step is, as you mentioned, identifying a complete listing of your leases that qualify under 842. The easiest way to go about that is typically checking the rent ledger, right? Just identifying what payments you're making that are coded to that rent category. You can go through and assess, do we have a lease that we've identified that covers this specific payment? That's one very easy way to start. There's also analytical procedures that you can run where you're basically identifying what you're paying related to the straight line expense that you're recognizing, and essentially trying to predict what the straight line expense might be based on your cash payments and assessing the variance between that and what you actually have down. So those are a couple ways when we think about identifying the lease portfolio that anybody outside of the accounting team can perform. But I know this is something we're going to continue talking about over the course of the day, but another key thing is not only identifying the lease portfolio, but also making sure that you know the data points within those leases that are going to be necessary for compliance, right? A couple of very basic ones: discount rates. Sometimes those are difficult to assess just by looking at the contract. Those are going to take communication from different teams to make sure, have we applied the appropriate rate? And then another thing I always like to point out, we mentioned auto renewals, right? How do you know when auto renewing a lease is something the accounting team needs to know about? Well, those are judgmental determinations made when you're assessing these new leases, right? Or even when you transition to 842, just trying to assess, with these renewals that we have in the contract, are we reasonably certain to exercise these? Now, from an accounting perspective, in a simple sense, if you are reasonably certain to execute, you pretend as if you've already executed them. So you're accounting for those leases throughout the expected term, whereas the real estate team still has to perform the execution. So all of this to say, it's important for individuals to understand the data points that are necessary for both the accounting and the administration of these leases, because a lot of times the specific data points are just a little bit different. But that's really where I think the focus should be, is A, getting that population together, but then B, once you've got that population, do we know the information that we need to know about these leases?
So Tom, in your experience, when a company engages you to go through and sort of inventory those leases, how big is that exercise, first of all? And then, as Jason mentions, going through the leases and understanding the content of the leases, what does that exercise look like to you?
Yeah, so it's interesting, right? So the answer is going to be, it depends. And part of that is every company is different in how well they maintain the leases under 840, but kind of touched on it earlier, right? Leases wasn't exactly a focal point for most people previously. And so deferred rent schedules, we'll see them just completely and utterly butchered and have been hard coded and changed for modifications, but that maybe they've not quite done it right. And so you've got random corrections littered right throughout the schedule. And so you can't always just go straight off of what the deferred rent schedule has from years gone by and say, well, we know that this is pristine information. It still requires checking against the lease document and making sure that it even reflects the latest iteration of the lease document, because a lot of times maybe a renewal has come in, or especially this year with COVID, right? There may have been modifications that have happened that never quite made it in because everyone's so busy. I know that'll be a surprise, right? Accountants stretch for time, but like they may not have quite made it all the way in and approved it, and you may not be looking at the right version of the latest deferred rent schedule, and so it's still going to take that effort to go through and verify that just because you think you have a complete lease population, that it really is reflecting your latest and greatest lease population. To kind of extend what Jason said, right? This will probably make Grant's auditor's heart happy. As a new auditor, we would do a search for unrecorded liabilities. A lot of times, as I'm helping companies, you do, this is really creative, a search for unrecorded leases by looking for in the P&L these repetitive expenses that are either the same or really, really similar, maybe because of CAM differences on a month to month, but you can typically spot them, right? You have an amounts, when you look at true AP vouchered amounts, you look and you try and verify, like, does this look like a lease and is it currently captured as a lease? And then it's checking, you know, do we even know what that expense is? Is it one of these evergreen leases that Jason was referencing that maybe we don't even use it anymore? It's been abandoned in a corner of a warehouse, but we're still paying all this money every year for it, right? And that kind of speaks a little to the strategy and the value that this process can bring to a company, is it really illuminates where some of your money is going and what it's going for, and whether it's even known throughout the organization as to how that's being spent. And so, at least on a completeness standpoint, that's some of how we can help come in and kind of drop in and help highlight where things might be wrong. I mean, this is where it differs from 606, say, where no one was missing revenue, right, under 606. Everyone loves to focus on revenue and making sure that they're scraping all that revenue that they can, and that's always complete. The expense side, that's where people kind of get a little bit complacent, or they're not, that's not the focus, right? It's not where they're going to spend their time. They're going to try and spend it elsewhere. So I'm sure Grant's got some great things on process that he's seen from companies that have started to adopt. And so I'll kick it to Grant.
Yeah, I mean, in terms of process-wise, I think the best advice I can give you all is start the process now. I mean, don't wait to start this process based on just what Jason and Tom have been chatting about here. It's quite a bit of heavy lifting. A lot of unexpected challenges may arise as you're starting to adopt 842, but definitely also engage us as the auditors and Tom and Jason as consultants as much as you can in this process. This isn't something that you should be going at alone. You have a lot of help out there. There are many ways that we can help with that process. You know, I think what it starts at is definitely with the education piece. I think every company needs to start by, if you haven't already, getting a strong understanding of the new standard, making sure, starting with your accounting and finance team, that they understand how to apply 842 and how that impacts the organization. That's where we can come in and help. You know, we do a lot of internal training to our team members, and we could just easily deliver that type of training to our clients or the companies out there needing that training, just get that baseline information. There's also tons of content out there, white papers, articles, archive webinars, and other educational pieces that people can rely on. I know Jason and Lease Query, they put a lot of great content out, educational thought pieces that that can be used. And then, you know, one thing we haven't chatted on about too much is just the internal controls. You know, that's an area that we can help. Tom and his team can help quite a bit as well. As I would imagine, it's going to require potentially a revamping of your internal controls and policy and procedures surrounding lease accounting. And there's going to be changes to those processes, which is going to require an updating of your narratives and your process and procedures, and you may need to put in additional layers of review. And that's all areas that folks aren't really thinking about yet, but we encourage you to start thinking about now and start putting in those extra controls. And that's where, you know, we can come in and assist with that process. Even at the start, you know, we talked about getting a complete listing of your leases, of your existing leases. About going forward though, how about as you enter into new contracts? You know, I've reviewed a ton of these contracts where it's hard to tell, is this a lease, is this not a lease? And that's important, because it's either you're under lease accounting or you're not under lease accounting, but you may need to put additional controls at the start, in the beginning of contract, as you enter into a contract, determine whether or not you even have a lease that you're dealing with. So a lot of changes to controls that may need to be put in place that I think folks should be engaging your CPAs and your consultants now to help with that process.
So Grant, that's a good point. You know, it's not a one and done exercise then, right? So this is not an adoption exercise and we just move forward and everything is the way it used to be, right? So I think from a process perspective, you talking about internal controls, that's important, but education, super, super important, getting people up to speed on how things are going to change in the organization when you identify leases, when you sign those contracts, et cetera. I did want to talk, Grant, a little bit about, so Tom, you're talking about identifying the leases and going through the exercise of, you know, coming up with a good ledger How do you engage the auditors now to make sure that you're doing the right things, right? Because I would hate for my auditors to come in next year and say, we effed up, we did not do it the right way. So what do you do there? How do you engage them?
I would say to start that initial dialogue. I mean, for companies out there that have a calendar year end, their 12/31/2020 audit likely is going to happen in Q1 or Q2 of 2021. That's a great time to start that dialogue. You're going to have to be preparing lease schedules anyway. You're going to have to be providing lease agreements to your auditors anyway. That's a great time to start that dialogue, and that's a great time for us to start assessing how many contracts do you have, like how many leases do you actually have that's going to be subject to 842, and that'll give us a sense of the time and effort that's going to be involved. If you give us your lease schedule and we have 5 leases, probably not going to be too challenging, I think, to implement 842. But if we start looking at your lease schedule and you're in the neighborhood of 50 or 100 leases, then we can at least start understanding what we're dealing with and the level of effort that's going to be involved. That's one way that's, naturally we're going to be asking questions about your leases anyway during the 2020 audit. That's a great time to start that dialogue, engaging your auditors to determine just the magnitude of the leases that you're dealing with. If you're 5-10 leases, maybe Excel would work. Once you get over that amount, we probably need to start thinking about some sort of lease software, and that's probably a process you want to start sooner rather than later. Q1, Q2 of 2021, if you haven't started that process already. And of course, I meant the education piece. So I'll start with the education piece. Just having a strong baseline understanding of 842 is another great way to start engaging your auditors and CPAs.
So I want to go back to people for 1 second, and I think, Tom, you might have been wanting to say something. Is this something that we can just ask the accounts payable person to engage in and just handle for us?
Oh yeah,
Like
everything
who's
will
the
go
person?
great. Nothing would go wrong if you did that. It would be fine. Who is the person? I think realistically, it's going to take a number of people, right? Because by the time accounting sees things, sometimes it's retrospective, and at that point, it can be too late, right? I mean, similarly, if you have someone in financial reporting, historically that might have worked because you're looking at lease obligation table in the footnotes, and realistically, materially, it's going to be right most of the time, right? When I was getting into 842, one of the things that I saw was it looks like it was for a big public company that everyone's heard of, and they missed a subsidiary, and it was something like an $8 billion miss on the lease obligation table in the footnote. But it wasn't material, so it was like, okay, all right, let's just keep going. That isn't going to be how this is all going to work for 842, right? That would be a big miss on anyone's radar, realistically. And so, yeah, I think the same people that Jason probably sees at the table for the end of this demo process when they're selecting softwares are the people that need to be on a continual cadence. Maybe it's a monthly or every other month or once a quarter kind of meeting where you have accounting, you have procurement, you have real estate, you have legal, and you have whoever you have decided for your company, maybe a regional head or right, it just depends on the structure of the organization. They need to be communicating regularly, which is often easy because accountants love to get up out their desk and walk around, right? Walk the floor, talk to everyone like they're a sales guy. That's just how it goes, right? And so, but they are going to have to get into that kind of routine of not just looking at what's come through the GL from AP or from wherever else. They're going to have to get up and get their head up a little bit and talk to all these different groups and people at the table to make sure that everything's getting captured, because otherwise you could have a million different guardrails in place, but if you're not talking, something is going to get missed. It's just when, right, and how big. So that would be my answer, Jason. I mean, I'm sure you've seen calamities and successes, so I'll let you kind of highlight those.
Yeah, no, I mean, I think everything that you said is pretty much covers what I would say, at least in terms of the people question, who needs to be responsible for making all of these types of decisions. I did want to jump back to something that Grant was talking about too, just in terms of the why should you get into this project right now, right? I think there's some of the obvious reasons, such as Grant alluded to, you're gonna have your auditor in the office potentially, or at least available via webcast as your audit takes place over the next couple months, January and February timeframe. So it's a good time that you just have availability with them to understand what are some of the things I'm not thinking about as it comes to 842 that me as a private organization really needs to get a hold of, and how I come about this. And I alluded to this a little bit earlier as well when we think about data points within the lease portfolio that you need to understand, like the discount rate, like understanding your renewal options, whether you're reasonably certain. A lot of times we think about, you know, if we've got the lease portfolio in place and we know that we're going to utilize a technology to invest, and we've got just enough time to get this implemented, why do it now? But I do think one thing, to Grant's point, getting started now, not only is this going to involve all of these different people that are going to be busy, as Tom mentioned, most accountants spend a lot of time every month closing the books. There's just not a lot of open time to really think about this. And one thing that we've noticed is that implementation timelines, not only just pulling the lease portfolio together, but getting that data into a software system, there's just a lot of information that organizations don't know they need. And I keep reiterating that, but that's a huge piece of this timeline, right? It's not just pulling the lease portfolio together. It's, if I have to capture present value and I'm using my cost of capital rate, the last thing I want is 6 weeks before I'm closing the books to find out that the cost of capital is actually the rate everyone tells you not to use, because it's not really related to the lease portfolio. So that would require you to either estimate an incremental borrowing rate for every single one of your leases, or go directly to a financial institution to understand what that collateralized rate would be. That's just one example, right? There's a variety of different examples there too. And then the education piece as well. It's going to be extremely important to have at least a baseline understanding of 842. That helps alleviate some of those issues we think about with the data points. But remember, teaching 842 to someone outside of the accounting department is going to be pretty difficult, right? You can keep it simple and just start thinking about, hey, these contracts now represent larger dollar values on our financial statement, so they're just more important to make sure we understand the key dates associated with them. When do we sign the contract? When do we obtain access to the asset with which we have contracted to use? Those are just a couple of things that I think can help when teaching all of these different people, and even the accounts payable team. Teresa, you bring it up, they're still involved, right? It's going to be important for them to at least understand that when they make a payment, it's not as simple as just coding the expense. And this is all a part of that process we need to have documented, because as you've said before, this isn't just an implementation and then we're good to go. These processes that you spend a full year documenting are the processes that you will use today going forward forever, as long as the US GAAP accounting standards is what everybody is accounting under. You're going to need to ensure that when an accounts payable individual makes a payment, they also need to make sure that if this payment is coded as rental expense, they need to make sure that there's an asset and liability associated with this payment. And if there's not, there needs to be a formal process in place to notify the appropriate people. So I think I've gone in 10 different tangents here in the last couple minutes, but I do think that just serves as an example of why getting started early is extremely important, because there are just so many corners of this puzzle to try to identify.
So I think I've just determined that I'm going to give my accounts payable person a big raise. I'm going to get them educated on 842, and I'm going to make sure they understand Excel really well, because they're going to have to track all this in Excel. Sounds like it, right? We're going to be good to go.
It's an option for organizations if they like very high risk tolerance.
Yeah. Yeah. So let's talk about risk, Jason. So Grant, I think you mentioned something about tracking things in Excel, or maybe it was you, Tom, I can't remember. If you've got 5 or 10 leases, maybe you can keep that in Excel. Let's switch gears a little bit to technology. We're going to come back through this whole process again, but so why can't I just have my AP person put all this in Excel and track it that way, the way I've always given my auditors the leasing schedule? Like, why is that not a good idea? And I'll just open it up to the floor.
I can start, I guess, from an auditor's perspective. If I were to come in to do an audit and a client had a high volume of leases and told me they transitioned to 842 using Excel, I think there'll be a lot more risk in that area. I think Excel could work if you have a nominal number of leases, but I think once you get over 10 leases or so, then you really need to start thinking about implementing a lease software. I have clients that have over 25, 50 leases, and in our initial conversations, they're contemplating using Excel to transition to 842, and I've told them that's not recommended. But if you choose to use Excel and you have a high volume of leases, me as your auditor, we're going to be spending a whole lot more time auditing just the reliability output of that information. There's just inherently some limitations with using Excel, some inherent risk factors, especially if you have a high volume of leases. If you built a big formula and they're all linked to different spreadsheets, one accidental keystroke could ruin the entire workbook. Naturally, just Excel gives more rise to the chance of human error, and just data integrity is an issue with using Excel. So we as your auditors, if we come in, we feel a lot more comfortable if you were using a lease software, especially a lease software from a reputable vendor. And also, if you have a vendor has a SOC assessment, that's an additional bonus. Just reduces the amount of auditing that we'll do on those computations.
Okay.
And to add to that, Grant, too, this might be a little bit of an extreme example, but one example I always like to put out there is like constructing your financial statements. If you analogize that to a house, right? Typically, people don't build their own houses, even though I could build my own house, right? I'm not going to build my own house because it's a little bit easier for me, and it lowers my risk of having a house that actually stands upright if I invest in property that was built by a professional contractor, right? And then analogizing the lease accounting 842 compliance to potentially just building bedroom furniture, maybe your bed that you sleep on, the dresser that you put your clothes in, the nightstand that you have a lamp and all of your key materials resting on as you go to bed. I think that's an example of, sure, you can build some furniture for your bedroom, and maybe if you have some skill in crafting that type of material, you can get it done. But not being a professional contractor just creates a limitless amount of risk in so many different areas. And again, you talk about data integrity, that's just one example, right? It's not even just the fact that an Excel spreadsheet can be manipulated by any user. It doesn't document who manipulates the spreadsheet, right? So you have somebody go in and one number gets changed that also flows through to the footnotes. Not only do you have an error, but you don't even know who made the error in the spreadsheet. That's just one simple example of data integrity. And when we think about controls, it's really hard to have controls built in around an Excel spreadsheet, but being able to monitor that type of activity in a system allows you to more clearly identify who is actually responsible for the data inputs, who's responsible for checking the box saying, I looked over these data inputs and they look appropriate to me. Oftentimes, Grant, I'm sure this has been something that your teams have done in the past, but creating or at least evaluating controls from a simplicity standpoint, just making sure that individuals at a specific level and above, like the manager level and above, are approving all data inputs into the general ledger, oftentimes alone can lower risk to a low risk evaluation when it comes to assessing for the level of substantive effort necessary to audit the financial statements. So those are a couple things there. Again, a lot of times we talk to people and they say, well, I've only got about 10 to 12 leases. And I think, Teresa, you had mentioned this as maybe that breaking point between whether it's likely to invest in software or not. And even below the 10 lease mark, I mean, I can attest, just being present on the lease query staff, that we have plenty of customers that even have 5 or less leases still utilizing our system, because ultimately, regardless of the number of leases that you have, you also have to take into consideration the bandwidth of individuals within your finance department. A lot of organizations are looking to get into that very lean finance type of organization where you've really just got one person managing the financial statements. You've got typically a financial analyst involved in FP&A, and you're trying to limit the amount of people that are responsible for doing work that doesn't necessarily need to be done by a person. So that alone is another thing to think about. Even if you have a smaller portfolio, oftentimes the dollar value itself might be material. And oftentimes too, if you just think about the investment from a cost standpoint that it takes to invest in a software, oftentimes when you weigh not only the pros of mitigating risk, having information available to you at any point, and we'll talk a little bit more about that later, but I think even that lower lease count, there are very good reasons to consider investing in cloud technology, because I think that's really the direction most companies are looking to go in.
So that's a good point you bring up, Jason. With COVID, investing in cloud technology is kind of important at the moment because none of us are going to an office. I mean, look at this call right here. I don't think anybody's in an office, are we? Pretty sure we're not. So being, having something that is accessible via the cloud is pretty important. Tom, talk to me a little bit more about, so you've inventoried the leases, you're not putting in Excel. What's your next step as a consultant?
So some of it is going to come to, and I know gentlemen here have kind of touched on it, is the education, right? There are some practical expedients within the new lease standard that management need to kind of make a determination on whether they are going to implement those practical expedients and how they want to treat those, right, as throughout the adoption, because that will play into Jason's world when you're setting up some of these softwares, assuming that you go with a software, which I was thinking while the guys were chatting, I think I've used Excel in a recommended scenario twice throughout 842. One was a public company sold, leased a building 2 weeks before the end of the quarter. And so they needed to, it was their first lease, right? So they had to get it in so that they could book it for the end of the quarter so that it could get into their financials for their 10Q. They didn't have time to adopt the software. It was a single building, right? So that's easy. The other one is to provide management with comfort that what, say, a lease query or similar is spitting out from an output standpoint. Like, can you recreate it for management, for the auditors? Just prove that the mechanics of the software are working exactly how everyone expects them to work, right? Even though there's no doubt at this point that lease query is doing what it says it's doing. There's something human about management wanting to see it in Excel where they can see exactly under the hood, right? To make sure that they know here are the different variables and here's maybe some sensitivity as to how much the number moves depending on what your discount rate is and things. But so assuming that you're setting up a system, and even if you're setting up an Excel, you have to know what's going into this Excel, right? So regardless, you've got to document what you did and how you got to that point and why you can be super certain and sure and confident that everything is complete. You've got to state basically how you are going to run your leases on an ongoing basis. So that relates to both the day one adjustment, whether you're adopting under the modified or the full retrospective effort, how you're going to do it on an ongoing basis, how you're going to treat classification, right? Because under 840, there's a lot of nice prescriptive, here's how you would bucket it into an operating lease or a capital lease. Most people are going to follow the same rigor when it comes to 842, but there is some subjectivity that everyone has been clamoring for, right? They've been looking across the oceans and seeing international standards being more principle-based and less rules-based, and everyone thought that looked fantastic. And it did, until they had to support the decisions and the principles that they were coming into. Like the gray area looked great until the gray area came here, and all of a sudden you have to navigate the gray areas, right? And so it's less cut and dry than it used to be. So you've got to document how you scoped. You've got to document what your new policy is going to be. And kind of to Grant and Jason's point earlier, your internal controls, how are you going to make sure that your safety net is going to catch everything beyond that point, right? So you have your shiny software system that you've implemented and it's running nicely on the servers that you don't have to worry about, right? But that's only taking part of it. How are you then going to take that information and what are you going to do with it? How are you going to maintain your leases as changes come up? Who's going to approve them? Who's going to control access to the roles within the software that allows certain people to do what, right? I know LeaseQuery has built-in things. Like if I have modified a lease, I can't approve the changes that I made in the lease software, even if I have those rights, right? It's smart enough to know that I was the one that made the change, so I can't approve my own change. I think everyone would acknowledge that's a good thing until it's 11:59 the day before it has to be done, and then everyone hates it, right? But realistically, everyone would rationally admit that that's a really good thing. But how are you going to go through that and make sure that you have all of these things in place? And it kind of speaks to Grant's point earlier. Grant and I and the people at LeaseQuery like Jason have consumed what many would consider, including my wife, an atrocious amount of material related to leases, right? Like no one would really, well, I say no one, most people would not choose to read as many articles and illustrative examples as collectively what we've done on this call. Why not leverage that so that you, in your busy schedule, when you're coming up to Christmas, like you don't want to be doing that. Like I will objectively say that I never thought I would be the person that would be doing that would know this stuff, right? Like this is not the path that I had plotted for myself in being this lease expert. But like you can leverage that because we've seen things from all of Grant's audit clients, from all of the companies that I've helped, from public SaaS to wherever, right? Like retail, like leverage that. Make use of that to make it a more efficient process so that you're not, since it is Christmas season, scrambling at the last minute to find those last minute gifts. I can tell you from experience, you can do it. You can get all the gifts you need if you're shopping on Christmas Eve, but it's not going to be as like well thought out and strategic and meaningful if you start now and you actually use this sort of delay to really like take a step back and think like, okay, our leases are all over the organization. They are on people's email and hard drives, and we don't really know where they are. They might be in a filing cabinet because we moved locations and we never really did anything with it. Like, this is a great opportunity with a system like LeaseQuery to have a central repository, because you can abstract all the leases in. You can store the actual PDF that supports what's in the system with that lease, so that you know exactly where to go to find this information when Grant comes in and starts playing Big Brother, right? I mean, like, you need to be able to do that for these, and it just makes life a lot easier, simpler, and just more organized, which we've all realized, right, this year, more organization is going to be helpful as we try and struggle forward. So I feel like that was a really long-winded answer, but hopefully I hit on what you were
You
hoping.
you did. So I'm hearing that it's something I should start now. It's not an accounting exercise, although to Grant's point, you know, the auditors are going to be the ones that buy off on this, right? So curious, Jason, in the most successful cases where you've implemented leasing software, Lease Query in this example for clients, who comes to the table for those software demos? Because Tom's talking about, adding contracts and workflow and things like that. Who comes to those demos? What does that look like? How do you get buy-in from the right players, and what are the most successful implementations, so that we don't just throw a bunch of accountants at a piece of software and say, this is going to work, and Grant's going to come in and he's going to just check the box.
Yeah, to steal from one of Tom's illustrious answers earlier, it does depend. And I think when we say it does depend, there's just context within every organization, right? So depending on the size of the accounting team, depending on that full process that we talked about, who's executing the contracts, what type of communication issues exist today. A lot of times we'll ask questions, and which seems somewhat like a little bit of an intrusive interview at the beginning of a demonstration, but the idea oftentimes isn't necessarily just for us to say, hey, we now know more about your process. It's more to really outline, here are some of the things that you need to be thinking about as you begin to look at implementing a software. And a lot of times it is not just who is going to use the software, but how it's going to be used. That's questions we get a lot of time, even post-signature, when we're starting to go through an implementation. Who needs to be involved in that implementation? Who needs to be involved in the training? Because there's a lot of things to think about, right? It's getting the contract into the system. Oftentimes, we have somebody from a real estate team, when we think about real estate leases, entering the data, and then someone from the accounting team goes through and approves the data. What we've tried to do within our system is build a tool that is nuanced to all of the fine details of 842, but easy enough to comprehend so that someone doesn't have to necessarily have an accounting background to get the data in the system. But there's always that fine line between making a system too simple to use and not including all of the necessary nuance. So that's why, again, it's really just going to depend on the volume of the portfolio. I think in the most idealistic state, we do see at least one point person from all of these different departments at least present on, whether it's a demonstration or whether it's in the training process in using the system. Because a lot of times you'll actually identify areas of process improvement just by seeing, oh, we have this new tool. Oh, it can do this. I can just upload a lease contract right when I sign it, and it will notify the rest of my team that, hey, we have a new document in the system. That's something that sometimes the people on the legal team don't even realize that you have if you don't inform them that you've invested in a system like that. So I think having a point person from all these different departments that we've mentioned at least represented within 1 hour of the training process can at least showcase, hey, we've invested in this new tool. Here's how all these different departments can utilize it together. What makes the most sense for us in terms of process when we think about getting the data in, approving the data, running the journal entries at the end of a period, reconciling that information against the general ledger to ensure payments are matching appropriately, to ensure that there's a complete portfolio, all of those controls you built in. And then, from a reporting standpoint, there's the footnote disclosures, but then there's also the ad hoc capabilities. Does upper management need information on the lease portfolio on a monthly basis? Like, how many expiring leases do we have coming up? What's our average rent per square feet in specific areas of the United States? Maybe we want to lease more in Boulder, Colorado versus New York City, just a lot less expensive per square feet. So again, there's just so many benefits you can get out of a system. So I do think it's important to reiterate again, think about all the different departments that are involved, and you don't necessarily have to have all of them. Just have one point person to have an opportunity to see what can we get out of a system like this? So.
Got it. All right. So we've got about 5 minutes left. Nyla, I'm not sure if we've got any questions coming in for the panel. Maybe if you could chime in and let us know that.
No, we don't have any questions.
No questions. Okay.
Nope.
Okay, so then I will leave it to Jason, Tom, and Grant. If you all have any final, what I'd love to hear from each of you is like, I've sat and listened to this panel talking about things that make me realize that I shouldn't probably wait and I shouldn't probably just lean on my AP person in Excel. Like, let's start with Grant. Final comments, final things to consider.
Yeah, I mean, I think I mentioned it at the start, but I've been following this standard since it was first introduced about 15 years ago. And the fact that it's taken so darn long to take effect really underscores just how complicated, significant of a change this new standard is. It keeps on getting changed, and proposals come out, and proposal keeps changing. Companies start implementing, and they finding it's a lot more difficult to implement than they originally thought, and it keeps on getting delayed and delayed and delayed. So it just really underscores how challenging this is. So my one takeaway is start the process now. This isn't a standard you can implement last minute when you're closing out the books and the auditors are coming around the corner. You may do that with other standards, but now with the standard, it could result in delays of the audit, delays in financial reporting, increased costs. So start the process now.
Hey, Tom, compare and contrast 842 to 606. Give me a little bit of an idea, because I know 606 was a pretty heavy lift for many companies. Is this smaller, similar, larger?
I think at this stage of the game, it's safe to say that it's a larger lift than 606. And I think that the noises that support that came out when some of the early public adopters like Microsoft and Apple came out, and they said, you know, very early on, they sounded the alarm that this is much more significant than anyone has given it credit for at that point in time. And much like, I think it's safe to say that majority of us have kind of pandemic fatigue at this point. After 606, there was this new standard fatigue because everyone was racing to try and get 606 done. After a long stretch prior without any new real big kind of meaty accounting standard changes. And then 842 comes along and everyone's sort of worn out, right? They got to the finish line on 606 and they were like, yes, we did it. And then there's 842 and everyone wants, again, it's leases. It's not something, you know, fun and focused like revenue. It's leases, right? It's an expense. No one cares. I'm sorry to all you lease lovers out there. It's not the same. It's not the same as revenue. And so with leases, it was like, oh well, we can putt this off. We can punt on this. And when companies like Microsoft and Apple, with the scale and breadth of their capabilities, right? You think about those companies and they have a lot of systems, they have a lot of people, they have a lot of resources that they can funnel to this to make sure they get it done. It wasn't as simple as what they wanted it to be, as what they expected it to be. And so to that extent, get a roadmap in place as to how you lay out from now where you are. Maybe you've done a little, maybe you've done nothing, right? But how do you lay out what you're going to do for now until when you have to adopt? And I'll say, you know, selfishly for Jason and I, start doing it now, because as you get all these procrastinators towards the end, and you're going to have less people that are just going to be able to jump in and parachute in and help you get you over the finish line. Like, people are going to get backlogged. Demos are going to be longer to schedule before you can actually get in, and before then you can implement, right? Once you've made a decision. And so the sooner you start, the more strategic you can be, and the easier it's going to be for you.
Right. All right. Well, we're at the end, Jason. I was going to let you have final comments, but it's 10:59. I think we've got some great feedback from the panel today. Nyla, do you have any housekeeping items for the team, or can we close this out?
Well, just one final note is that all participants will be receiving an email within 48 hours with a link to the recording, and you can also send any questions to that email as well. And that's it for today.
Excellent. All right. Thanks, everybody, and have a great rest of your day.